You're watching today's Daily Market Comment by Jarala Buspisuros. I'm Cristina Marujos, and thank you for joining us at XM.com. The euro was the main gainer against all the other major currencies in the last 24 hours, with King Dollar settling in second place. Concerns expressed by several European central bank rate setters over its depreciation, their willingness to take rates higher than previously estimated, and the latest slide in natural gas prices may have encouraged traders to enter euro-long positions or abandon existing shorts after several unsuccessful attempts to break below 0.9910 against the greenback. For the first time since August 19th, euro-dollar succeeded at daily close above parity, adding to hopes that further recovery may be in the works. Another leg north may materialize as soon as today when the Eurozone's preliminary inflation numbers are coming out. Expectations are for the headline harmonized index of consumer prices to hit a fresh record of 9% year-on-year, which could only add to speculation over a 75 basis points hike by the ECB at its upcoming gathering. However, euro-dollar downside risks have not vanished. Although natural gas prices have dropped sharply this week, looking at the bigger picture, Dutch prices are up more than 1,000% since last year. Therefore, consumer prices may continue to bite in the months to come, even if the European Central Bank acts more forcefully moving ahead. Most European indices, except DAX, finished their session slightly in the red, with the risk aversion accelerating during the US session. All three of Wall Street's main indices tumbled around 1%, and Nasdaq was the one to suffer the most, adding to the narrative that market participants continue to abandon risk-linked assets due to central bank rhetoric, and especially in the United States. Yesterday, New York Fed President John Williams echoed Chair Powell's view that interest rates are likely to continue rising and stay high for some time by saying that the committee is unlikely to cut interest rates at all next year. More hawkish language could start convincing investors and thus add further pressure to equities and other risky assets. Besides the Eurozone's inflation numbers, Canada's GDP data are also on today's schedule, with the annualized quarter-on-quarter rate for Q2 expected to have risen to 4.4%. Something like that could add to the case of another bold action by the Bank of Canada at its upcoming gathering. Investors are currently assigning a 75% probability for a 75 basis point hike, and improving economic growth could take that number higher. However, it doesn't necessarily mean the Canadian dollar could shine in a similar fashion as its US counterpart. It seems that the currency is wearing its risk-linked suit rather than one tailored for local monetary policy, and with risk appetite non-existent, it may continue to perform poorly against its neighboring US dollar. Thank you for watching today's Daily Market Comment here at XM.com.